Managerial Accounting in Incremental Analysis, lecturer Salah Shbeir. We will continue the make and buy decision. Make or buy decision. In make or buy decision, relevant costs are manufacturing costs that will be saved, the purchase price of the unit, opportunity cost. So the correct answer is C. Now we will take exercise which contains A, B, and C. Opportunity cost, the loss potential benefits that could have been obtained from following an alternative course of action. In the make or buy decision, it's important for management to take into account the social impact of its choice. In the past exercise, we will add additional data. Assume that through buying the switch B company can use the released productive capacity to generate additional income of 38,000 from producing a different products. This lost income is an additional cost of continuing to make the switch in the make or buy decision. In the previous exercise, the decision to make the switch internally because the result at all negative 25,000. Now we will take the opportunity cost in consideration that we can, if we buy the product from outside, we can use the capacity to produce additional income 38,000. Now we add to the previous result the effect of opportunity cost. So the previous cost, total cost for make 225,000, for buy 25,000, we net negative 25,000. Now we add the opportunity cost, which will result in increase make cost by 38,000. So the new result will be increased net income 13,000. So the decision will be in this situation to buy switches from outside supplier and use the release capacity to produce additional 38,000. In this situation, the net income will increase by 13,000. New exercise, make or buy. Again, which is better, to make products internally or buy it from outside supplier? The company must decide whether to make or buy some of its components for the appearance it produces. The cost of a product of producing 166,000 electrical cars for its appearances are as follows. Now the company produces 166,000 units, which cost the following cost: direct material, direct labor, variable overhead, fixed overhead. If we add these costs together, it equals 166,000. Instead of making the electrical cars at an average cost per unit of $1, which is total cost 90,000, 20,000, 32,000 plus 24,000. Total cost 166,000 divided by units, 166 units. Total cost divided by units equal $1 per unit. This is the production cost per unit, $1. Now the company has an opportunity to buy the cars at $0.90 per unit. The company can buy the cars at the price 90 cents per unit. If the company purchases the car, all variable costs and 1/4 of the fixed cost will be eliminated. Now, if we purchase the cars from outside supplier, the variable cost, which direct material, direct labor, and variable overhead will be eliminated. But fixed overhead, we can eliminate only 1/4. Remain 3/4 that will be absorbed with other products. Prepare an incremental analysis showing whether the company should make or buy electrical cars. Make or buy. Make, which alternative A, current situation. Alternative B, buy the product. Here, the incremental analysis. What's the effects on net income, increase or decrease? Direct material, make 90,000, buy 0, so it's increase net income if we buy from outside. Direct labor, 20,000 positive. Variable manufacturing cost, positive. الفيكس manufacturing cost في الميك 24,000. في الباي we can eliminate only 1/4, so the remaining fixed cost will be 75%. 75% from 24,000, 18,000. So we reduce the fixed manufacturing only 6,000 positive. The purchase price will be 166,000 unit times 90 cents equal 149,400 will be negative. Total effect negative 1,800. So the decision will be make the product internally. Make the product internally is better. Also, we see total cost per unit $1. We can $1 higher than the outside price, which is 90 cents. But the make decision is better for the corporation, because if we buy the product from outside, the net income will reduce by 1,400. Now we will take in consideration the opportunity cost. We now has additional information. B, will your answer be different if the released productive capacity will generate additional income of 3,000, additional income of 5,000? We will continue the analysis in the previous case. Now we add opportunity cost. Opportunity cost, if we make, we lose 5,000. وبالتالي so we add to cost of make, opportunity cost 5,000, the new total cost for make 171,000. So the buy alternative will be better. Now in B situation, buy is the correct decision to buy the product from outside, so we can increase net income by 3,600. Yes, net income will be increased by 3,600 if the company purchases the electrical cars rather than making them. Now analyze the relevant costs and revenues in determining whether to sell or process materials further. We know what is the relevant cost where revenue to take decision to sell the product now or complete processing to another phase. We have option to sell the product at given point in production or to process further and sell at higher price. Again, what is better for company to sell the product now or process further and sell it at higher price? Here is the rule. Process further as long as the incremental revenue from such processing exceeds the incremental processing cost. Process further as long as the incremental revenue from such processing exceeds the incremental process cost, because the difference will increase net income. Here, this exercise. Woodmasters Incorporation makes tables. The cost of manufacturing and finished table is $35. تكلفة and finished table $35. The selling price per and finished unit is $50. In this phase, the cost per table $35. We can sell it as it is by $50. This is the current situation. Now we discuss if Woodmasters has unused capacity that can be used to finish the tables and sell them at 60 per unit. The new situation, alternative B, to complete manufacturing the tables and sell them at $60 per unit. For a finished table, direct materials will increase $2 and direct labor cost will increase $4. Variable manufacturing overhead cost will increase by $20.4, 60% of the direct labor. No increase is anticipated in fixed manufacturing overhead. الكرنت كوست $35 manufacturing cost per unit. If we increase complete to process the tables, to complete the table, to finish the table, direct material will increase $2. Direct labor will increase $4. We variable manufacturing overhead will increase $2.4, but the fixed manufacturing overhead will remain the same. Here the incremental analysis single product case في حالة انه منتج واحد. هنا sell unfinished. current situation alternative A, sell tables as unfinished, sell the price $50. Alternative B, if we complete the process, the selling price will be $60. So the net income will increase $10 positive. الكوست as current cost for production cost per unit في unfinished $35. net income per unit, the difference between 50 sales price with total cost 35 equal $15. Process further, new data new sales price 60, cost direct material 17, which is 15 plus 2, direct labor 14, with variable manufacturing overhead 8.40, fixed manufacturing overhead the same وبالتالي هي التوتال كوست في حالة بروسيس فارزا. النت income per unit 16.60. incremental analysis differences between alternative B alternative A positive 1.60. So the decision will be process further. Process further will increase net income by $1.60 per unit. Another multiple product case, لما يكون عندي multiple product case وبدي أعمل process further or sell now. Cream and skim are products that result from processing of raw milk وهي common process joint cost ترتب عليها two products cream skim milk. joint products cost are sink cost. الكومن الجوينت كوست عندي joint product cost are sink cost and thus not relevant to the sell or process further decision. Joint cost at this stage consider not relevant to take decision to sell or process further. Cost of revenue and revenue data per day for a cream. Joint cost allocated to cream $9,000. Cost to process cream into cottage cheese $10,000. Revenue from products per day لكريم 19,000. Cottage cheese 27,000. Determine whether the company should simply sell the cream or process it further into cottage cheese. سؤال. Question is, which is better, to sell the cream in this state or process further وsell it كcottage cheese؟ في السيل اند باي sales per day في السيل 19,000 process further sales 27,000 net increase 8,000. الكوست في الكوست per day to process cream into cottage cheese هنا في السيل fish additional cost. but here في عندي additional cost 10,000 وبالتالي النت income will be decreased 2,000. Maris should or shouldn't process the cream further? The answer is shouldn't process the cream further. So from an incremental analysis, it's better to sell the cream in this stage, not to process it further. Now the other product for skim milk cost per day, joint cost allocated to skim milk, وcost to process skim into condensed milk, revenue هي skim milk وcondensed milk. Determine that the company should sell the skim milk or process further into condensed milk. The second product, sales per day, if we sell it as it is 11,000, but if we process further, the sales will be 26,000. So net income increase 15,000. But the cost في السيل هنا zero والadditional cost 8,000. النت income per day هيكون increase 7,000. So Maris should or shouldn't process the cream further? The answer is yes. Will process the cream further because will increase net income 7,000. In incremental analysis, from this case, the decision is to sell cream in this stage or to sell the skim milk in this stage. It's better to this company to sell product cream here at this point, and the other product to process further, sell it as condensed milk. هنا process further as long as the incremental revenue from processing exceed. This is multiple choice. Incremental process cost, variable processing cost, fixed processing cost. No correct answer is given. As we see from the previous question, process further as long as the incremental revenue from a process exceed incremental processing costs. The correct answer is A. Sell and or process further. Is it does its manufacturing and painted furniture for the do-it-yourself market? Do it yourself. Do it yourself market. It currently sells a charge rocking chair for $25. Production cost per unit are 12 variable and 8 fixed. It is considering painting. Does it is considering painting the rocking chair and selling it for 35? To process further and sell it instead of $25, buy to a new price 35. Variable cost to paint each chair are expected to be $9 and fixed costs are expected to be $2. Prepare an this is showing whether easy does this should sell unpainted or painted chair. Shortly, as you see, an incremental increase in price further to process further $10, but the additional cost $11. So the correct decision to sell the chair as unpainted. Prepare an analysis showing whether easy does it should sell unpainted or painted chair. هاي في السيل عندي now الكان situation sell كان situation في عندي net income 5 process further the new price will be 35 variable cost will increase $9 will fixed cost sales show will increase $2. So net effect is negative. So the decision is sell the product at this stage, not to process further. Analyze the relevant cost to be considered in repairing, retaining, or replacing equipment. G Company has a factory machine that originally cost 110,000. It has a balance in accumulated depreciation of 70,000. So the machine book value is 40,000. It has a remaining useful life of 4 years. The company is considering replacing this machine with a new machine. The new machine is available that costs 120,000. It is expected to have zero salvage value at the end of its 4-year useful life. If the new machine is acquired, variable manufacturing costs are expected to decrease from 160,000 to 125,000 annually, and the old unit could be sold for 5,000. Prepare the incremental analysis for the 4-year period. Prepare the incremental analysis for 4-year period to take decision return or replace the equipment. Variable manufacturing cost في return equipment في current situation for 4 years. Replace equipment variable cost لل4 years هي increase هنا الاوريجينال كوست، وهي الشغلة هي الفيربال كوست a new machine manufacturing. Variable manufacturing costs are expected to decrease from 160,000 to 125,000 annually. So we this analyze for 4 years. 4 years, term me 160,000 times 4. Variable manufacturing cost. Variable manufacturing cost 160,000 times 4. هنا 125,000 times 4. New machine cost replace sale of old machine. We will reduce the cost of replace. The difference will between replace and return is better, will increase net income 25,000. Here reduction of variable costs positive, buy the machine negative, sell the old machine positive، وبالتالي النت effect is better, is increase net income 25,000. So the decision will be replace the equipment. Additional consideration in our book value of old machine doesn't affect the decision. Book value is a sunk cost which cannot be changed by further decisions in cost are not relevant in incremental analysis. Any trade in allowance or cash disposal value of the existing asset is irrelevant, as we see 5,000 in the previous case.